Hi, everyone. I'm sharing my screen. Okay, wonderful. You can see it. Hi, everyone. If you're here, if you're listening, welcome. Thank you for joining us. This is our Q1 2026 investor update about the rise. And I'm happy to say that we are stabilized. We are 8 months in under management and things are going well. We are stabilized. There are a few hiccups, but nothing that we will not overcome. So this is our first year holding the deal. Like I said, 8 months in. We acquired it in September. And at the end of Q1, we're about 8 months in, and we have truly kind of stabilized the property. And the next plan is to continue to grow it. So I'm really excited about the rise, all that we're doing, all the plans that we have. It's all coming together. So, so in the 8 months, kind of what has happened. So just to catch you up to date, the rise is a 2022 build. Class A, 128 units, and we acquired it in September. And so we're about 8 months in. And Q1 net operating income for 2026 was around 308,000. And so we're looking at, because we don't have a full T12, so full 12 months of financials, we're looking at kind of just a trailing 8 months. So we have about 831,000 in our net operating income in the last 8 months. And current occupancy right now is 93%, 93.8 to be specific. And that was at close of Q1. So we are year one of our 5-year hold, and we're truly kind of on a path of stabilization. We are doing, I'll talk a little bit about kind of our plan, and I'll move in. I think a lot of it will be on the next slide. Yep. Okay. So this is a snapshot or a picture. This is very important. Please feel free to ask me questions around this slide, whether it's text, call, phone, email, but this is where we are right now. But what I want to do, which I think is very important, is compare our actual numbers to the assumptions that we made in our underwriting. So the kind of 8 month cumulative, right? The total income that we projected in our underwriting was 1.6 million. And the actual, what we are making up to date is about 1.5 million. So we're about 7% shy of our assumption. But a good part is our operating expenses are actually down, which is really good. So we projected about 818,000, and our expenses are about 740,000. So about a 9% difference, which is good. So our net operating income, kind of based on that, looking at 8 months, we projected that would make about 900, a little under 950,000, but actual really looks more like 830,000. Our physical occupancy and our underwriting at this time, we said we'd still be around 90%, but we're actually at 93%, almost 94%. So it's a really good thing. And then we have preferred equity on this deal. And so that's going according to plan. We're servicing the loan, and that's working out really well. So one of the things kind of thinking about our kind of operating thesis, right? The goal is we started off with holding where we are, and then really trying to push at the top. And that means push at the top means when we think about the net operating income, right? The two factors are the income and expenses. So we're doing really well with kind of our expenses and running the property to 22 properties. So we're running it at a really good expense ratio. So now the big thing we want to do up top is to increase our income, and so part of that is really figuring out how to increase expenses, how to increase income, so how to increase rent, right? That's the thing that we want to make sure that we're doing right now. And so in the Atlanta market, right, in the last kind of year, rent growth has been minimal, but that's because there's been a lot of supply that has come to the market. But that has significantly decreased, and there's barely any new supply coming to the market. What that means is that there'll be demand for properties, right? There'll be demand for living spaces, and it's what's currently on ground. And so rent is going to grow organically, but we'll also be able to really start on some of our kind of thinking through renovation plans. For the Rise, we didn't have heavy renovation. We had, tech packages. We had planned to renovate kind of the exterior. So we're doing all of that, right? That's kind of our plan. As we continue to do that, we're going to start seeing the income grow, but it's also relying on the natural organic rent growth that's going to start happening because supply has decreased significantly. So kind of 8 months of operation, this is what it looks like. We are almost on target and kind of growing our net operating income, but you saw where we're shy of 12%. But this is kind of annualized, right? On a yearly basis, we're going to be at about 1.2 million. But again, this is just the first 8 months. So our goal was stabilize it, start running it, start operating it more efficiently, start growing our income. So we're at the point where now we're going to start pushing on some of those factors. And so this is, again, just kind of a snapshot of where we are. We are operating the property at about a 47% expense ratio right now, which is good. Our occupancy is around 93%. And then I talked to you a little bit about our net operating income, where we are, where we need to be. But this is just, again, a snapshot of looking at where we are, what we plan to do, and what we're looking at kind of the next 12 months, the next 24 months, really the next quarter as well. But the biggest thing is, how can we start thinking about operating more efficiently? And I'll talk to you about kind of some of the plans we have. But before that, I want to talk about really alignment. And I think it's the most important thing, especially for you as an investor, right? I want to be able to tell you exactly where money is coming in from, where it's going to, and how much is coming back to you. So our goal is always like an LP, so limited partner, which is who you are as an investor, always getting your cash flow first and always securing your equity and your upside. I think that's the most important thing. And so our plan is to give you back that 6% pref, to give that back to you first. There is no catch up on our part, so we're not making any additional money other than the split, which is 80-20. So after you get your 6% plus the catch up on the investor side, right? The rest was going to split it 80-20. 80 goes to you, 20 comes to us. So it's really important. We have a pref equity overlay, right? So that's a little bit of additional debt that we got from preferred equity. And so that we got 5 million blended at around 16%. So that looks like 6% that's soft compounding, and then 10% that's hard, that's accrual. And so that's also something that we're paying out on a monthly basis. But other than that, so your cash flow, pref equity, and that's it. So that's what we're getting right now until we hit your 6% pref, and then we'll split it 80-20. But I just wanted you to know, kind of thinking about how you and us are aligned. So our goal is, as we manage it, and I know we're 8 months in, right? We're very, very young in management, but the goal is always to be thinking about the end in mind, right? So how can we continue to manage the property better? We're at 93% occupied, and as of today, which we're now in Q2, right? We are at 95% occupancy, so we're growing, and I think we had 5 new move-ins. So our numbers are constantly looking really good. And part of that is really really managing the property really well. And what I mean by that is really focusing on our, working hand in hand with our property management team. So the asset management from our side, plus our property management team, and really being hands-on the property. But the goal is, again, right, to push the top line revenue to get to the pace that we want to be with our underwriting. And while we're doing that, we're also decreasing expenses. And I outlined some of the ways that we plan to do that. But again, right, the biggest thing is really hold the line but push our numbers. I think that's the biggest thing. So it's going to be a combination. So we have a revenue management software system that we use that really tracks occupancy, and that really helps to make sure that we're staying where we want to be. The goal is to get to 95, but we're almost there, but we're always looking for ways to make sure we get there. So that looks like maybe on a few properties, maybe giving a little bit of concession to try to make sure that we get those units occupied so that we can continue to get that income and then phase that out. But we have a property management software called Rent Vision. And so we use that to really help us with revenue management from an occupancy standpoint. And so these are I wanted to real quickly talk about some risks that we see with, what can happen to the property long term. The the idea is that we always want to stay ahead. So we always want to think about what could go wrong and how we can mitigate those risks so that when they happen, right, we already have plan A, B, C in place. So the first thing I talked to you about, which my goal and our goal, right, from the management standpoint is to be transparent with everything that we're doing. So I shared with you kind of the net operating income lag between our underwriting and what our actual numbers are. But I also kind of shared with you our plan, what we plan to do to kind of move that forward. And again, it's really push the top, which is push rents while continuing to really operate the property as well as we can and keep our operating expenses low. And also thinking about the end in mind, right? So making sure that like we are not forced to exit, right? We're at a good point. We have fixed debt. And so we're just constantly kind of comparing what we're doing, our actual numbers to our underwriting and making sure that we are on track so that we can get the returns that we assumed. That's why we're constantly looking at our underwriting. The property is stabilized at right now at 93.8%, and that's way above our underwriting. So we're really happy with that. We're really happy with kind of the hands-on our property management team, a retention program. I talked to you about Rent Vision that we use to really keep occupancy stabilized, but that's our goal. So it's a combination of rent plus some concessions if we need to, but that is tracked that's actually tracked really on a weekly basis. And so we're always able to pull that lever up or down. And then kind of looking at the Atlanta market, I alluded to the fact that demand is starting to pick back up, and it's going to pick back up within the next 6 to 12 months. That's in our favor because then rents are just going to start growing organically, right? As demand increases, rent is going to increase. We're going to benefit from that. But that is just like really kind of tracking what's going on in the Conyers market with what's going on in the Atlanta MSA market as a whole. But that's what we're seeing. And we're really excited. We're really looking forward to kind of that increase in demand, which we've seen because supply has significantly dwindled. We don't have a lot of new property that's coming to market right now. So there is more demand for what's already in place. So that's kind of thinking about some of the risks and how we're able to mitigate it. And I think that's really important. So our goal is to continue to stay stabilized, right? Our goal is to kind of keep occupancy where it is, but also increase it, right? The goal is not to go down, it's to continue to go up. And we want to close that gap, between the actual figures that we're getting with the net operating income and what we underwrote, right? So how can we continue to compress that gap? And it really is a factor of increasing the income and continuing to decrease expenses. And so we want to keep that operating expense ratio kind of around where we are 40 anywhere from 45%, right? But keep that delta somewhere around 10%. So that's really important, right? And then the goal is, again, always thinking about the end in mind. So we want to make sure that we're managing the property from a management standpoint. We're really managing it from a very disciplined perspective. And so that is constant communication with our property management team. We meet on a weekly basis to really kind of understand how the property is doing. We meet with the regional managers on a monthly basis to actually also kind of have high level on how the property is doing. But that's kind of our goal, is really to stay stabilized, continue to improve the asset, kind of start relying on the organic rent growth that's about to start happening, and then build from there. The goal is exit around 2030, 2031, and we have fixed debt, so we are in no rush. We're in no rush to exit today, tomorrow. We don't need to rush it. We just need to continue to maintain the property well, and we're doing that as we've already hit stabilization and beyond. And so I wanted to kind of share where we are today with you as our investor, right? We've been able to acquire 153 million in assets under management, and those look like all the properties that we have owned and we've invested in together with our investors. So I just want to say thank you. We have an investor event May 16th, and it's going to be a property tour. So we will actually get to tour the Rise. If you haven't seen it, I know a lot of us kind of saw videos, but if you have the opportunity to be in Atlanta, we're going to tour the Rise, and we're going to also tour Park at Arlington. And so you will get to see two assets, kind of compare them. The vintage, the years are different. And so we can just compare them, kind of see how they are, see how they're operating, and just get a feel for what it looks like, even interact with some residents. And then in the evening, we're going to have dinner and just really come together to celebrate what we've built and to kind of plan and think about a vision for what Phoenix will look like. So I want to extend that invitation. We've sent emails, but I wanted you to hear from me. So as you're listening to recording, please feel free to reach out to us. If you can make it, I would love to see you there, and we can continue to build and grow together. And so kind of just in summary, this is what it looks like, right? 8 months in. We are just 8 months in, but in those 8 months, right, we're at 93.8% occupancy, and we've actually gone higher Q2 month 1. But we are operational expenses 9.5% favorable compared to what we underwrote for. Our net operating income is less, about 12%, but the goal is to close that gap. And we're doing that with true active management and thinking about ways to really increase rent, increase income, and decrease expenses. And then from a capital standpoint, making sure that we are aligned with you, making sure that you are getting your quarterly distributions, and that's coming in, as well as while we service the pref equity portion, and then knowing that we are last. And then the goal is exit, right? At the end of the day, we always are thinking about that exiting. So we always want to make sure that we are in line for that. Right now, we're doing well. We have fixed debt, and we are continuing to kind of manage the asset well, continue to keep it stabilized, and then after that, start growing it, and then keeping an eye on what the Atlanta MSA is doing. And as we figure that out, we'll react to it. So we're excited to see what the next year is going to bring from a supply and demand perspective. But no matter what, right, we're going to continue to manage it with significant discipline. So I want to tell you thank you for listening. If you have any questions at all, put it in the chat. But more than that, please feel free to reach out to me, reach out to Grace, send an email, a phone call, whatever. I know that we sent out distributions recently. So everyone, I know we've been in contact with everyone, but if you have any questions at all, please feel free to reach out to me. So I'm going to stop sharing and opening it up for questions. So if there are any questions, again, right, please feel free to reach out to me, reach out to the team, and then in whatever way we can help you, we'd love to. Okay, everyone, have a great evening. Bye.